a letting agent manages your property, there's a reporting mistake that catches landlords constantly under making tax digital. And it comes down to one number. In the next few minutes, we will show you how to read an agent statement for tax, why the bank figure misleads you, and how to handle the timing and reconciliation that agent-managed properties demand. Here's the core mistake. Your agent collects the rent, takes their fees, pays for the odd repair, and sends you what's left. The temptation is to record the net figure as your income, and for years, under self-assessment, that was tolerated because the profit came out the same. Under MTD, it's non-compliant. You must report the gross rent as income and the management fees as a separate expense. Take £2,000 of rent with £240 fee. The wrong way is income £1,760, no expense. The right way is income £2,000 and a £240 management fee expense. Same £1,760 profit, but only the gross version produces the correct HMRC category totals, and the quarterly update is built on those categories. Why does this happen so often? Because the bank feed only ever shows the net remittance, the money that actually arrives. If you start from the bank, the gross rent and the fees are invisible, and any repairs the agent paid on your behalf are missing entirely. So the bank quietly pushes you toward the net figure. The fix is a mindset shift. For agent-managed properties, the agent statement is your primary source document and the bank is just a check. So here's the workflow. Step 1. Get the agent statement for the period. Step 2. Record the gross rent as income from the statement, not the bank receipt. Step 3. Record the management fee as an expense under legal, management and other professional fees. Step 4. Record any agent-paid repairs, insurance or other costs in their own correct categories. Step 5. Reconcile. Gross rent minus the fees minus the agent-paid expenses should equal the net remittance in your bank. If it doesn't, find out why before you file. That reconciliation is your proof that the quarter is right. Now the part landlords underestimate: timing. Agent statements run on the agent cycle, often a calendar month or a mid-month date. MTD quarters run is fixed dates, they rarely line up. Take a tax year first quarter ending the 5th of July, the filing deadline is the 7th of August, but the July statement might not arrive until mid-August. So a single quarterly update may draw on 3 or 4 statements and the cutoffs won't match. The answer is to chase statements the moment each quarter ends. Don't wait for the agent to send them because many agents don't even know their landlords now have quarterly obligations. If your statements come monthly, electing calendar quarters can align the dates more closely. 2 more wrinkles. Under cash basis, the income date is when the tenant pays the agent because the agent receives it on your behalf, not when the agent remits to you. Usually that's the same month, but if an agent holds funds, say for a maintenance, reserve or a deposit dispute, the income can fall into a different quarter. And if you use more than one agent, remember that there's still just one UK property business. You aggregate every agent's figures into a single set of quarterly totals. 3 or more agents, each with their own format, is where errors compound, so standardize how you extract the figures. Why does HMRC care about gross versus net if the profit's the same? Because MTD reports against defined income and expense categories, and a net figure underestimates both income and expenses by the agent's fees. The category totals are wrong even though the bottom line isn't, and a quarterly update that doesn't reconcile to the right categories is a non-compliant submission, exposing you to penalties. Getting the gross figures right is what keeps your whole quarter defensible. 3 common mistakes: 1. Recording the net remittance as income. 2. Starting from the bank and missing agent-paid repairs entirely. 3. Filing late because the agent statement arrived after the deadline you didn't plan for. 5 recommendations. 1. Treat the agent statements as your source document every time. 2. Record gross rent, fees, and agent paid costs in their own categories. 3. Reconcile to the bank before filing. 4. Chase statements the day each quarter closes and consider calendar quarters if your statements are monthly. 5. If you have multiple agents, map every statement into one standard template before you enter the data. Myth: the money my agent pays me is my rental income. Reality: your income is the gross rent, the agent's fee is a separate expense, and the statement, not the bank, is where you start. RentalBux lets you import agent statements as PDF or CSV, splits the net remittance into gross rent, fees, repairs, and maps each to the right category, and reconciles to the bank across multiple agents into one property business. Start your free trial or book a demo to see it on your own statements.